Hello. My name is Benjamin Z. Miller. Benjamin Z. Miller. And today I am going to answer the question of a new investor. Someone has a question about passive income. Their question concerns passive income. And the question is, how do UK gilt strips for passive income work? So let me read that again. How do UK gilt strips for passive income work? So for those of you that are not from the United Kingdom, a UK gilt is a government bond. So the question is, how do UK government bond strips for passive income work? How do UK gilt strips for passive income work? Well, good question. First, don't forget to like and subscribe for more content just like this video. The answer is a gilt is a UK government liability in sterling, and it's issued by HM Treasury and listed on the London Stock Exchange. The term gilt or gilt-edged security is a reference to the primary characteristic of gilts as an investment, their security. This is a reflection of the fact that the British government has never failed to make interest or principal payments on gilts as they fall due. So what are gilt strips? Well, strips involve the separation of the interest coupons from the underlying principal on which the interest is payable. Certain gilts and other securities are strippable in this way. The holder can surrender the gilt to the Bank of England, receiving in return a number of gilt strips, each of which is treated as a gilt in its own right. Each strip is simply a right to receive a payment at a future date. It carries no interest and therefore is like a zero coupon bond. It carries no interest. Anyone buying a gilt strip would pay less than the redemption amount. Wouldn't make any sense to buy it unless it paid less than the redemption amount. How much less would depend on the period from purchase to redemption. Gilt strips are independently tradable, like other freestanding securities. Where a collection of strips has the same maturity date, it can be reconstituted to form a single gilt. So let's take an example. Let's say there's a 10-year gilt that is paying interest every 6 months, and this particular bond is stripped into 21 stripped gilts, one for each interest period plus the principal. So basically in 10 years, you've got 2 interest periods, so 20, and then you've got the return of the principal, so 1. So it's a 10-year gilt paying interest every 6 months. It's stripped into 21 stripped gilts, one for each interest period plus the principal. This is done by surrendering the original gilt in exchange for 21 new gilt strips. The strip that represents the right to the first interest payment is worth more than the strip representing the right to the last interest payment. The value of the strip that represents the right to repayment of the principal depends on the amount to be repaid and the period of time to redemption. So the question was, are they a good way to obtain passive income? No, they're not a good way to obtain passive income. They offer very low passive income, but they offer reliable passive income. There are numerous other better ways to obtain passive income. Far better than gilts if you want more passive income, if you want a higher rate of return, would be corporate income bonds offered by Andesite Blue, that's one of my companies, or Alamo Mortgage Holdings, that's another one of my companies, if the bond buyer prefers earning a higher rate of return. If you would like to learn more about investing for passive income, just register for my free weekly training at www.benjaminzmiller.com. Go to www.benjaminzmiller.com and look for the meetup group. or go to meetup.com and look for Benjamin Z. Miller. I hope that helps, and good luck with your investing.